Hey, what's going on? I'm Meta World Peace, former New York Knicks player, New York City legend, and you are watching Taking Stock.
2 minutes to go here into the close. Time to rock and roll on this Friday, May 22nd edition of Taking Stock. We are live down here on the trading floor of the one, the only New York Stock Exchange. Speaking of one and only, look who joins me now to kick off the broadcast. The Einstein of Wall Street, Dow Jones Industrial Average yet again. Another all-time high.
Yep.
What did you see on the tape today into the closing auction here, Peter?
You know what? Look, we came in this morning. There were a couple of tweets that sort of knocked the market off a little bit, although we rallied right after the post on the opening and then spent the rest of the time in solid green territory. And then as the afternoon went on, it felt like we were just, into a little bit of a profit taking after a really great week. 3-day weekends traditionally are going to be a little bit of profit taking in advance of, anything could happen. We're in the middle of so many things going on, whether it's the Fed chair, whether it's what's happening in the Middle East, what's happening with the president. So, with all that, there's a little bit of edginess coming into it, but these are amazing levels to close any kind of a week, right? We've had more back-to-back record highs in the Dow. The S&P is trading, not at its high, but pretty darn close.
Yeah.
So I think it's a formidable week in all respects.
And for the week with NVIDIA earnings, it's not necessarily just tech doing the heavy lifting. It's a strong outperformance from healthcare, utilities, industrials. Energy's obviously been a story now for a few months here.
Well, it is because you've got oil trading above $100 a barrel for months and months at this point, and that's going to weigh on the economy. So that is the inflationary fear.
We'll be watching you with Dan Eisen and Aaron Burnett tonight, CNN, 7 o'clock. Have yourself a great weekend, my friend. Thanks for being here. Time now for the close. And there you have it, the team from U-Haul down here on the trading floor of the big board as we head into the long 3-day Memorial Day weekend. Our very best to all members of the armed services as we take a look at a record-setting day, at least for the Dow, and lots of gains across the major market indexes as we head into the 3-day weekend. To Peter Tuchman's point, he says frequently we see a little bit of profit taking on a Friday like today. Not necessarily the case. Your final tail of the tape, the S&P 500 up, let's call it 0.4%. The Dow in record-setting territory up more than 0.5%. The New York Stock Exchange Composite Index is up 0.4, and the small caps, the best of the bunch on this Friday, May 22nd, up 0.9. The Mag 7 tech stocks in mixed territory. Tesla, the outperformer. NVIDIA shares down fractionally once again. The VIX volatility falling back down to where it was in early February before the conflict in Iran even began. Oil benchmarks on the day, kind of a split difference. West Texas down fractionally. Brent, however, the global crude benchmark up. Gold and silver down on the day as well. Let's bring in our first guest. He joins us via Zoom. I want his take on today's tape and much more that he's following across these markets. Please welcome Brian Jacobson, Chief Market Strategist at Annex Wealth Management. Brian, I want to get your take on what you've seen specifically out of a lot of the big tech names. We know it was all eyes on Wednesday afternoon session to Jensen Huang and the team at NVIDIA. How have you seen not just that stock perform since we got those huge earnings, but really the rest of the world of tech?
Yeah, thanks for having me. It's been a really interesting week, but of course, I think we can say that just about every Friday when we do a little bit of a recap. And when I was listening to the NVIDIA earnings call and obviously digging into the numbers as well, I thought it was just a little astounding how they're having $80 billion in share buybacks this year, $20 billion in dividends. So, simple math, $100 billion, that's more than 1 quarter's worth of revenue. I mean, the extent to which they have the margins and the growth where they're able to not only reinvest for growth, run the business, but also have that type of return for shareholders is pretty impressive. And I think that really just helps kind of paint the picture about why it is that tech has really been the force to contend with over the last couple of years. It's their ability to generate cash. Now, obviously, there are questions about the sustainability of that. Will it be able to grow at the same pace? And that's one of the reasons why here at Annex, the way that we've been positioning portfolios is really looking more at not necessarily as the biggest tech, but what are some of the smaller tech companies that might get caught up in the draft and maybe be the beneficiaries of some of that cash flow. One of the areas that we added to this past week was just looking at something as simple as S&P 500 equal weight industrials, right? Industrials are probably going to be the ones who are the beneficiaries of a lot of the productivity improvements that can come from this technology. So it's been a great week for tech, but I think it's looking even better for some of the other areas if we're thinking about looking ahead instead of looking backwards.
And a pretty strong tape today for all equal weight sectors, maybe with the notable exception of telecom down fractionally, but equal weight tech, equal weight utilities, equal weight healthcare, a lot of these other sectors. It's not just the market cap weighted parts of the S&P doing well. To your point, we are kind of seeing that broader breadth across the tape as well. Let me get your take on Kevin Warsh. How do you expect he now officially, as Fed chairman, will navigate the final 5 FOMC meetings here in 2026, Brian?
Yeah, he's got his work cut out for him, that's for sure. It is a very discordant committee that he has. When we looked at the minutes, the fact that you have some of them are saying that we should probably contemplate hike sometime soon, but several of them are saying, well, no, maybe it's more towards the other side. Warsh, he's going to have a fractured Fed to have to try to bring them together and come up with some sort of policy statement. It could be really interesting on that front. The more interesting part, though, I thought was with President Trump, when he had commented about that he's just going to let Kevin do his thing, that he's not going to interfere. We'll have to see if he actually abides by that, because we know that under Chair Powell, President Trump was quite vocal about demanding rate cuts. But that would be a big stretch with where we see gasoline prices right now and the inflation expectations, to have the Fed actually be kind of bullied into cutting rates. I think that Kevin Warsh is going to prove that he can really, basically stand strong against any sort of vitriol that might get thrown at him.
Brian, I'm about out of time. I got less than 30 seconds. Any other big catalysts you're paying attention to for the trading weeks ahead?
Yeah, for the upcoming week, I'm really looking forward to seeing how it is, like, say, Costco, how they report. We saw what happened with Walmart. They said that they're getting hit with both sides, costs going up with fuel costs, and their consumers are feeling the pinch. Are we going to hear something similar from Costco? So I think that's going to be really fascinating.
That's a good one. We'll get Costco results and a few of the other big box retailers next week. Brian, it's always nice to see you. Come see us in person again soon. Brian Jacobson, Chief Market Strategist at Annex Wealth Management. Enjoy your weekend. Howie will go this way. We are now down officially here to the final 4 teams in both the NBA and the NHL playoffs, and Polymarket traders are weighing in with their projections. We'll start with the world of basketball. Oklahoma City Thunder, 50% odds to repeat as NBA champs. San Antonio Spurs and Victor Wembanyama, 31% odds. The New York Knicks at 20% odds to become NBA champs after last night's huge 16-point win over the Cleveland Cavaliers. They're down to 2%. Over in the world of the NHL Stanley Cup playoffs, though, a little bit more parity across the tape. Montreal Canadiens, 19% chance to hoist Lord Stanley's Cup. Vegas Golden Knights, 21. Carolina Hurricanes finally lost a game in the playoffs at 29. Colorado Avalanche remain top dogs, 33% chance to once again lift the Stanley Cup despite losing Game 1 of the Western Conference Finals. Howard, let's take a look at one New York Stock Exchange notable that calls the big board home, and we gotta talk tech. XLK, the big tech ETF, up a full percent on the day, now up 24% since the start of the year. By weight, the most important names in this ETF: NVIDIA, Apple, Microsoft, Micron, Broadcom, and AMD, all of those tech names, with the notable exception of Microsoft, of course, at or near all-time highs. Only energy as a sector has outperformed technology so far here in 2026, though if you go back to the last 52 weeks, or of course the last 5 years, technology stocks overall remain top dog. Throughout its very long, and I should say very impressive, 234 years of history, the one and only New York Stock Exchange has been on the cutting edge of modernization. Let's now take a closer look at the innovation of the big board itself over the many years.
When most Americans think of the founding of America, they're probably thinking of Philadelphia, the Declaration of Independence, Independence Hall.
But there's another founding story that began on a narrow 8-block dirt road known as Wall Street, outside of a building called Federal Hall. And that story has been ongoing for 234 years.
And the proof of that story is right here in these rooms. This is the NYSE Heritage Collections and Archives. Over 17,000 feet of documents, artifacts, and history. Now, as America celebrates its 250th birthday, we're going to go through some of that history, a history of continuous revolution and innovation. It's 1792, just 3 years since George Washington took his oath of office at Federal Hall. And on May 17th of that year, 24 brokers gathered beneath a buttonwood tree on Wall Street and signed an oath of their own. The 2 sentences of the Buttonwood Agreement were all it took. Sentences that laid the foundation for the world's most enduring and influential financial market. But like the Declaration of Independence was for America, the Buttonwood Agreement was only the beginning. Like America, the NYSE needed a constitution. And that constitution finally came in 1817. By 1820, every broker member was required to sign on to it. Over 200 years later, every new member of the trading floor community signs on to our Constitution. It's a living document, men and women signing every year, swearing an oath to a set of ideals. So what did trading actually look like when that first Constitution was signed? Well, nothing like today's marriage of humanity and technology. Instead, it was brokers sitting in their assigned seats, like members of Congress, each engraved with their own number, trading in stocks one at a time, in blocks of 5 minutes under the watchful eye of the exchange president. Deliberate, methodical, almost statesmanlike. For nearly 8 decades, the exchange's members trading from those seats did what millions of New Yorkers do. They rented. But in 1865, right as America was piecing itself back together after the Civil War, the exchange finally put down permanent roots at the corner of Wall and Broad. And to safeguard those roots, we had to show title, through deeds like these going all the way back to our Revolutionary years and beyond, bearing Dutch names like Ten Eyck, British names like Livingston, even Vice President of the US Daniel Tompkins. More than just titles to a building, these documents are strands of DNA, from Dutch colony to British colony to American capital, straight through to the present day. That 1865 building and all the buildings since have never been just a marketplace. They're home to an exchange of ideas and innovation, and one of the great engines powering America through both war and peace.
When the Civil War was tearing the country apart, the exchange raised the capital needed to fund the Union effort. After the war, we embraced the first fintech revolution, the stock ticker. The ensuing boom forced the NYSE to tear out its seats and invent an entirely new way to trade.
And when America entered the First World War 2 generations later, Liberty bonds were sold on the NYSE trading floor, becoming not only the first investment for many Americans, but an investment in freedom around the world.
And in World War II, freedom needed financing once again. War bond drives returned to the trading floor, and something else arrived for the first time. In 1943, more than 600 NYSE employees left New York in order to join the war effort. So the question remained, who would keep the trading floor running? And the answer was women. For the first time in exchange history, women stepped onto the trading floor working as pages and clerks, and they trained for this role on this model trading post, originally intended for the 1939 World's Fair. These trading posts were far more sophisticated than their predecessors and contained every possible piece of broker-supporting technology that was available at the time. A newspaper at the time noted that the stock market girls turned in an enviable record, working with the ease of a veteran as if they'd been doing it all their lives. One piece of cutting-edge technology that the stock market would have used was this Dow Jones Wall Street Journal news ticker. Dating from the 1940s, this news ticker would print out up-to-the-moment stock price information furnished by Dow Jones, as well as breaking financial news from the Wall Street Journal, on a continuous strip of 5-inch wide paper. This was, at the time, the fastest way to receive up-to-the-date financial information, the predecessor to the modern digital news terminal. In this side holster, there would be a pair of scissors, so a sharp-eyed clerk could quickly cut the tape and run it over to the corner office. Breaking news delivered at a sprint. After the end of the Second World War, as America entered the space race, nearly a dozen NYSE-listed companies were instrumental in getting the first man on the moon, from the Saturn V rockets to the lunar lander to the food that sustained our astronauts in space. Meanwhile, when they weren't creating computers for NASA, International Business Machines was enabling the most ambitious overhaul that the trading floor had ever seen. For the first time, specialists had access to live trading data directly at their fingertips from structures such as these embedded directly in the trading posts. Using the Designated Order Turnaround System, or DOT, this IBM unit could send orders directly to specialists on the trading floor. DOT became Super DOT. Super DOT gave way to the Super Display Book. Each generation of trading floor technology has stood on the shoulders of its predecessors, embodied today in the form of NYSE Pillar, the exchange's fully online integrated trading platform. 250 years ago, this country took a gamble on self-rule and independence, on the idea that free people, given the right tools and a fair set of rules, could create something entirely new.
And the NYSE took that exact same gamble 234 years ago, under a buttonwood tree on Wall Street.
Every step along the way, every war, every crisis, every breakthrough, and every name on every document in this building is part of a continuous story, an American story, a story that is still being written on the corner of Wall and Broad every day.
Welcome back to this Friday edition of Taking Stock, live from the trading floor of the New York Stock Exchange. Our next guest joins us now. This is Amanda Tuminelli, the CEO and CLO of DeFi Education Fund. Amanda, nice to see you here on this Friday afternoon. So Congress is moving closer and closer to more formal crypto market legislation. Let's start our conversation there, Amanda. Where are we now, and where do you most suspect we go from here?
That's right. We had a successful markup out of the Senate Banking Committee last week, which means that the crypto market structure bill is moving forward towards the Senate floor. So now we're just waiting to see when there's time for a full vote of the full Senate on that legislation. And it's going to be really important as we do that, that we make sure that the bill continues to have robust developer protections, protections for the people building the future of finance in this country.
The intersection, the conversation about developers and liabilities, it's an important one, and it's a really interesting one to me. What is the importance of protecting developers as the debate continues over things like open source liability?
It's of the utmost importance, right? If we want people to build new tech here, we have to protect the people building that and make sure that the laws are clear so that they know what they do, what developers do and don't have to comply with. We want to incentivize innovation here, and we do that by creating clear rules and clear expectations for people creating technology.
There's a really important landmark case, and I want you to help me better understand it. Make this make sense. The Roman Storm case, i.e. Tornado Cash, landmark legal battle, all about developer liability. Why is this case right now so significant?
This case is very significant because it is one of the foremost cases dealing with new technology in the digital asset space. Roman Storm was accused of running or conspiring to violate money laundering sanctions laws and also the laws related to money transmitting businesses. But he was a software developer who created non-custodial software, meaning he didn't take custody or control over anybody else's money, but he created software that allowed other people to transfer their own money. And as our digital world becomes more decentralized, becomes less intermediated, we want to give people autonomy to custody their own funds, to transfer their own funds as we live more of our lives online. So this case is really at the forefront of that. And we are now waiting for a possible retrial in that case. Roman was found guilty of one count of that unlicensed money transmitting business charge, but the jury actually hung on the other counts. So could not come to an agreement as to whether he was guilty or not guilty on those other two counts. So this is really still a very live issue.
Amanda, unfortunately, that's, first of all, an incredibly important case. We will continue to track the latest of it here on Taking Stock. We are out of time. I hope you'll come back at some point because I do want your perspective on regulators responsible for shaping the presence and the future of crypto policy, the role of the CFTCs, the SECs, the OCCs of the world. But we'll have to leave it there. Please come back and see us again. Amanda Tuminelli, CEO and CLO of DeFi Education Fund. Amanda, have a great weekend. Everyone else watching at home, don't go away. A lot more Taking Stock coming up live from the trading floor of the big board right after this. Let's rock and roll. Welcome back to the show. Vineet Adupuganti joins us now. He is the co-founder and CEO at Cogent Securities, live here on the trading floor of the big board. Nice to see you today. Happy Friday.
Likewise.
AI-driven cybersecurity. What an incredibly important time to have these conversations. What is your work at Cogent all about?
Good question. So at Cogent, we are an applied AI lab focused on cybersecurity. Right now, the reality is that enterprise cyber teams across the globe are drowning. There's a lot more work to do than people to do it. And the unfortunate reality of the problem is that it's adversarial. So hackers are now using AI to move with faster speeds, more sophistication. Cogent builds AI agents that amplify existing security teams and help to actually combat what hackers are doing right now.
I mean, it's a fascinating development, right? Because you got the good guys using the good AI tools, but you also got the so-called bad guys using a lot of the same tools.
Yes.
How do you ensure you stay one step ahead of the bad threat actors out there who largely have access to a lot of the same advancements?
100%, and I think that's the reality that we're dealing with a number of organizations right now. And so it starts with understanding how defense actually works. And historically, it's been a very manual process, right? And especially in the world of vulnerability management, you have teams that are looking at vulnerabilities coming from different scanners, then they go to 5 or 6 data sources to contextualize, figure out what to focus on, route it to the right person, get things fixed. That can take weeks, right? And you look at what's actually happening in the threat landscape, these vulnerabilities are getting exploited in minutes and hours. And so the idea with these defensive AI agents is build these systems that operate like your best employees, but they never sleep, right? They work 24/7. It's like having a sentinel around your environment to find the gaps and then close them proactively before the bad guys actually get it.
You've got a fresh round of funding. If I'm not mistaken, 53 million?
That's correct.
Congratulations. What can you do with it? How are you looking to deploy it? And some of the things you hope to do now and maybe you could not do as easily before?
It's a good question. There's a couple different vectors there. Number one is just R&D. This problem is not for the faint of heart. And I think one thing that's really fascinating about cyber is that you can't be wrong, right? You're wrong in one direction, a company gets breached. Wrong in the other direction, you may take down legitimate business operations. And so with that, there's a bunch of research that we're doing, thinking about ways to deploy state-of-the-art AI, fine-tune models, all those different components. There's also a significant aspect around just reaching more and more customers. We are industry agnostic. We have customers in manufacturing, casinos, higher education, so scaling our go-to-market teams and continuing to expand our reach as much as possible.
Is there a bit of a double-edged sword to using artificial intelligence in the world of security, and what are some of the maybe unexpected headwinds that you come across in your industry that the rest of us might not even think about?
So I think with AI and security, the first thing is doesn't make sense. And I think the reality every chief information security officer is coming to terms with is that there's no other way, right? When machines are on one end, you need to use machines, like you said, good AI to fight the bad AI. That said, there's a couple things that are very important. One is robustness, right? Hallucinations, things like that are absolutely unacceptable. Having tight guardrails, having tight controls, super critical. Other pieces around explainability. Nobody wants to give up all their control and just hand it off to a black box system they can't have inputs into that they can't understand. And that becomes a really important product principle for us and the core tenet of how we actually build our AI to be as effective as possible for cyber.
Vineet Adupuganti, co-founder, CEO of Cogent Securities. Congratulations on all the success and the fresh cash. Thanks for joining us on the show today.
Appreciate it. Thank you for having me.
Take good care. Enjoy your weekend. Folks, don't go anywhere. After a quick break, the preview of next week's earnings from Salesforce, Best Buy, and others. More taking stock after this. Yeah. Good job, bud.
I'm Scarlett Sieber, Chief Strategy Officer here at Money 2020, and this is Hindsight 2020. Let's rewind to May 23rd, 1995, about 30 years ago. Sun Microsystems released a new program language called Java. At the time, it doesn't feel like a financial event, just another developer tool in a growing tech ecosystem. But in hindsight, this was the moment software stopped being tied to machines and started becoming infrastructure. Java's promise was quite simple. Write once, run anywhere. Code no longer depended on hardware. Applications could move across systems, companies, even continents. This abstraction changed everything. Suddenly, banks, enterprises, and governments could build systems that scaled independently of the machines they ran on. Complexity moved into software layers, invisible, portable, and endlessly extensible. This is the moment modern financial systems become software systems, trading platforms, payment rails, risk models, compliance engines, all of them increasingly lived in code, not buildings. Let's fast forward to today's conversations around cloud risk, vendor concentration, AI models, and operational resilience. They all rest on the same foundation laid in the mid-1990s. Finance runs on abstraction. The upside is scale and efficiency. The downside is opacity and dependency. When systems fail now, they don't fail quietly. They fail everywhere at once. Back to that date on May 23rd, 1995, which reminds us that technology didn't just speed up finance, it changed where fragility lives. And that is your Hindsight 2020, because once finance became software, understanding the code became just as important as understanding the balance sheet.
Next week here on Wall Street, we will be closed and we will be off on this show on Monday in honor of Memorial Day, to remember all those who, of course, gave the ultimate sacrifice in our armed forces. And then starting on Tuesday, a lot of very crucial quarterly earnings calls. We will bring you the latest of, including names like Marvell, Salesforce, Snowflake, Best Buy, Kohl's, Dell, MongoDB, and others. Your final tail of the tape on this Friday, May 22nd. The S&P 500 in positive territory, 0.4%. The Dow Jones Industrial Average closing at a record high, and the small caps up 0.9%. Thanks for watching today and all this week's edition of Taking Stock. All the best for Memorial Day weekend. We'll see you again on Tuesday.